Hello, dear community, and very welcome in our next talk regarding corporate venturing. I'm super happy to have very distinguished guests today with us, the co-authors of this wonderful book, The Venture Mindset, and Franz Zöchbauer, who brought this to us. Franz is the Managing Director of Verbund Ventures. Franz, welcome to our studio.
Great to be here.
Yeah. One of the co-authors, Alex Denk, Senior Advisor to McKinsey and former Amazon executive.
Thank you.
Welcome. And Ilya Strebulaev, Professor at Stanford Graduate School of Business and the founder and director of the Stanford Venture Capital Initiative. Ilya, welcome to our studio.
Thank you for inviting us.
I had the pleasure to talk to you for 5 minutes now, and I learned already so much that I'm really curious to learn more about what you have to tell us. But I'd just like to introduce you first. We know Franz already, the Managing Director of Verbund Ventures, one of the key corporate players in the innovation ecosystem in Austria, really doing a lot on many levels. But you are, since I think 20 years, over 20 years on Stanford, doing research in what fields? Could you just give us a short intro to it?
Of course. So I've been at Stanford for 21 years now. And my research is on venture capital and innovation, of all the aspects of venture capital and innovation. Just to give you a couple of examples, one aspect of my research is on how some companies become unicorns, highly valuable startups, and many others don't. What are the factors of success and failure? Another example is why the United States has such a developed venture ecosystem while other countries don't. And what is the impact of the venture capital ecosystem on the macroeconomic growth? For example, one of my research outcomes, which I think is really important, especially for Europe, is that in the past 40 years, a non-trivial part of macroeconomic growth, the existence of the technologies, including the ones that surround us today, is because the United States had developed such a venture capital ecosystem. Okay. Another example is, another interesting question is innovation hubs. So we all, of course, know about Silicon Valley with Stanford at its core, but there are many other innovation hubs that have been growing over the past 20 years. And the question is why some places become innovation hubs with quite developed venture innovation ecosystems, while many others don't. Many others don't succeed. So this is just an example. And on top of that, I've been privileged to teach many students at Stanford. I think more than 5,000 students. And I teach a couple of classes, but I think the class that is really relevant here for this discussion is the class on venture capital. That's students at Stanford who would like to become founders and invest a stake. And I'm particularly pleased that two of my former students are sitting here. Alex was a full-time student at Stanford and took my class. And of course, Franz was a student at our flagship executive program and also is my former student. So hopefully one day you'll come to Stanford as well.
Maybe. That would be, used to be, or maybe it will be again a dream of mine, but I have small kids right now, so it's a bit postponed for later times. Former Amazon executive, I might not quote him correctly, but I just remembered videos from Jeff Bezos, who said, what's the difference between America and the innovation strength there in Europe? And he said the amount of risk capital, venture capital in America. Is that something that you also feel when you work for companies like Amazon?
That's exactly the case. And that's why we decided to partner with Ilya to write this book, is to share examples and mechanisms of how a company of the size of Amazon, I mean a very traditional, established already company, could still innovate like a startup and still invest and invent new businesses like AWS or Amazon Advertising and many more. And I was part of that journey and I enjoyed it. And I do think that lots of these mechanisms could be learned by other companies, whether they are in a retail, manufacturing, energy sector, regardless of a sector. It's not just about the technology business anymore. It's actually bringing this mindset to senior leaders of such organizations. And that's why we wrote the book, because the mindset of Amazon leaders is very similar to how venture capitalists make decisions.
Wow.
And we saw so many similarities in terms of the frameworks and ways that they make decisions, because they face uncertainty and they have to invent and reinvent themselves all the time.
And the secret sauce is not as secret as it might seem. It is there, open to use, and Verbund is one of the companies that is implementing this knowledge. Franz, what kind of impact does the theory have also in practice in your company? Is this book also influencing your work, daily business at Verbund?
Yes, it is. We use it on a daily basis. And it's also so useful because it's so practical. So many examples shown what works in other companies, what's not working. So it's really an instrument for us. We give this book also as a gift to all our leadership members at Verbund, so that everyone knows it, the keywords, the buzzwords we're using in venture capital.
Fantastic. But Ilya, but it's not only the venture capital. What do you understand under venture mindset? Does it apply only to venture capital firms or to the whole innovation ecosystem from A to Z?
What I think is very important to realize is that the venture mindset in fact, doesn't apply only to venture capitalists. So the reason why we call it venture mindset is that, so I've been studying venture capitalists for many, many years, and I realized that the way they make decisions is very different from traditional organizations, for example. But when the venture mindset is applied to other organizations, whether it's corporations, whether it's universities, whether it is non-profit organizations or government organizations, then this new way to make decisions, to organize the entire process, allows these organizations to be much more efficient. When I say organizations, it's both the organizations, their outcomes, but also specific individual people and groups within those organizations. And so the idea is that, yes, it did come from venture capitalists that have been applying this for 40 plus years. But now I think, and Franz, I think, in his organization is a great example, is that smart organizations around the world started applying these specific practical principles of the venture mindset, both strategically and tactically.
For the whole business, for the core business, or for the new business that they're trying to develop?
That's a very good point, and thank you for asking me. Because what we call the traditional mindset, okay, that still most of the time should be applied to the core business. But once we talk about innovation, new business units, implementing new ideas, that sometimes will replace the core, especially at the times of disruption, then traditional mindset either cannot be applied or will substantially reduce the probability of success if it's applied. So this is where the venture mindset is really critical.
Okay. How do you establish where am I right now? What mindset do I need? Are there any guidance on that?
Yes, so there is one trick to think about. If you are facing more or less stable situation, when you can predict the future, when you deal with the core business where you actually can rely on business planning, then a traditional mindset is fully applicable. Actually, it's recommended. However, whenever you will face uncertainty, you simply cannot predict what will happen next year. Therefore, you have to apply a different mindset. Whether you double down or quit, you make bets that you have to track, and then kill some of the opportunities and keep the ones and double down on the successful ones. So all of that framework is applicable when uncertainty dominates the landscape. And that's where you may merge new things like Amazon or AWS. What is Amazon today? It's not just e-commerce, it's Amazon Web Services, which is the profit pool for the whole company. So this is a new business or it's the core business? We never know. So it's basically what's happening when you create and grow new businesses from within.
Is the venture mindset something that you have or you don't have, you're born with or you're not born with, or can you learn it? Is it a tool set that every company can learn and apply?
Obviously you can learn it. So that's why we, of course, wrote the book. That's why we often lead strategic sessions for the leaders of all large companies globally, is because this is something that not only you can learn, but I think you should learn to be successful, especially in the disruptive situation. And as Franz said, we try to make it very practical. So the venture mindset is organized around 9 principles that venture capitalists use, every single one of them. And this is how the book is organized. And for each principle, we provide specific practical implementation points, which is how you should do it.
Wow.
Okay? And sometimes also how you should not do it.
Yeah.
Which is also very, very useful. So I think that there are 2 kind of layers here. First is that absolutely both organizations and groups and people can and should learn the venture mindset. But second is that it's not just theory, And this book is not just theory, okay? It's very practical, tactical implementation strategy.
How did you implement it, or how are you about to, or in the process of implementing this book at Verbund? Do you have any advice on our other audiences and corporate managers here?
Now, first of all, read it and discuss it with your colleagues in the company. And I think it's of utmost importance if you do a CVC unit, that you do the governance right. That's really upfront, the right decision, that the CVC unit can take its own decision, and it's not depending on the procedures and the committees of the corporate. If you look at the examples in the book, it's quite easy to implement it. For example, one recommendation is that junior speaks first. Yeah? And normally in the meetings, also in Verbund Ventures at the beginning, everyone looks at me, what is Franz saying, or what is the leadership or the most senior people saying. And now I always refer to the book. Now I'm last in the round, juniors speak first. And then you have another perspective on an issue. And that's, if you implement it, then it's natural in the future that the junior speaks first, yeah? Or agree to disagree. Really, what's the opposite opinion? Yeah? And here really some quite good examples that you can use, and you can refer to the book, and that's really helpful in the day-to-day business.
Good. Listening to you, I was thinking to myself, and please correct me if I'm perceiving this wrong, but the implementation of the book is not rocket science, but the research behind it is the rocket science that you guys do at Stanford.
Well, first of all, I do hope it's rocket science, because it was quite difficult to implement, and some of this, of course, took 20 years to implement. I think very importantly is that the implementation is not rocket science, but let me tell you that sometimes what is not rocket science is even more difficult to implement.
Okay.
And the reason is that when you're doing research, yes, it is difficult technically and intellectually sometimes, but here, what Franz is doing, very often you need to overcome challenges. You need to overcome the existing mindset, the existing relationships, the way people interact, etc. I actually think sometimes it's much more difficult than rocket science, okay? It's sociology, it's psychology, it's group decision making. And I think what Franz and his colleagues are doing at Verbund is important, but that is the first step.
The first step, which is guided to the second, third, and so on and so forth. Are you allowed to talk about how this process functions at Amazon, to give us some advice of how do they do it? How do they remain as innovative as they are?
Totally. The recipe or the playbook is actually publicly available and known. It's more of a how to implement that. Say, double down or quit. We called one of chapters like that, which is a staged approach. If you think about venture capital, what happens is that it starts with a seed capital and goes to Series A, Series B, Series C. So it's a step-by-step process. No one would invest in a startup hundreds of $millions right away. Similarly, at Amazon, they would do the same. You would start with a very simple document called PRFAQ, press release. Kind of a strange idea to write the press release even before the first line of code is written, but this is how it's done. Because you want to see and understand the problem and test it with first users. The first test is going to be MVP, minimum viable or minimum lovable product. Very small scale, but it's critically important to understand whether it resonates with users. Think of this as a seed stage. Then you shift to a Series A, Series B, Series C. They may not be called this way, but the mindset is exactly the same. So you will be provided with capital and resources as you progress, and close ideas and businesses which are not as promising as they were expected to.
Very interesting.
Let me just add, which is, I'm sure that there are many corporate decision makers who are watching us.
Yes.
Okay. So how often do you remember cases in your organization where you were investing in the project again and again, even though there were indicators that the project was not successful?
Yes.
Okay. And that is in the chapter. In fact, there's a phenomenon that has a name. It is called escalation of commitment. And it is one of the single biggest problems in large organizations, okay? And venture capitalists develop specific strategies how to deal with this. And yes, we have a chapter on this with Alex, double down or quit. Okay, it's a fancy name. But in fact, behind this fancy name are very, very specific implementations about how you prevent escalation of commitment, which not only allows you to ensure that the projects that are not going well are closed, but also frees up resources so that you can invest in more projects, and some of them are going to be very successful, okay? And venture capitalists, because of their business model, very quickly realized is that unless they resolve this escalation of commitment problem, because they, of course, face so much uncertainty, they're going to be out of business, okay? And I think that this part of the venture mindset is where you can just read and then learn and change your decision-making process. And we observed how a number of large organizations changed this and found, in fact, that specific chapter very, very important.
That's super interesting. I remember I used to be corporate manager as well, and we always used to say, well, we've invested so much money already in this project, it would be pity to stop it now since so much money flew into it.
And that sounds reasonable, right?
Yeah.
And it isn't.
It isn't, yeah.
And it isn't. And this is exactly what venture capital is trying to prevent, because they have this problem in every single of their investments.
Hans?
Yeah, I confirm this challenge exists, and it's a big challenge. And we also implemented one of your recommendations for Verbund Ventures when we do follow-on investments. So the investment manager leads on the first investment is not leading the second one. So we have a rotation in the team, because otherwise he's maybe in love and would like to do a further investment.
Interesting.
So it's really something.
That is the classical escalation of commitment that then are resolved.
Yeah, I wasn't even aware that that's the rule in the venture capital scene. It's also very fascinating. In startup world, we say die fast, die cheap. If you see that something is not working, so that would be another term of explaining the same phenomena, probably.
So, yes, but remember, Dan, is that just saying, you know, you have to die fast, die cheap doesn't really help, because it's a great slogan, but it's not very practically implementable, because nobody wants to die fast or cheap, okay? So therefore, again, I think that, and this is really critical to understand for any decision maker and for your organization, and this is what really the venture mindset is about. It's not about slogans. It's about specific practical implementation. So Franz gave a number of specific examples. For example, indeed, you know, if any of us is going to invest it, not just money, but also our time and our emotions into a project, of course I would like to continue. Because maybe we're founders or we're investors and been closely associated with the project. So of course we would like to continue. And if the project is not successful, we may not be able to sit. We're blind to that. So what is the one? There are many other solutions, but one of the solutions is to ensure that if I invested in a project and Franz is on my team, then when the decision comes up whether to invest $50 million more in this project, it is not, the decision is now not led by me, by Franz, okay?
Very interesting.
So that is a very practical. Now, there are ways to implement this optimally.
You put it into governance.
But that, exactly, in the entire process. So again, I think that if you can think about one line that summarizes 20 years of research into the venture mindset, is that it's really about process.
Trust the process.
It's trust the process, but the process is different from the way process is structured in the traditional mindset. And there is something else which I think is really important. This process have to be proactively managed. Because if you don't, then the venture mindset does not come up by itself. It is not entirely intuitive. It's intuitive once you understand it, but especially in the traditional organizations that are led by traditional mindset, the venture mindset is counterintuitive.
Who should manage it? Is it the CEO of the core business, or do you recommend implementing a new unit with this specific knowledge and know-how to foster this process?
I think that's a very important question. At the end of the day, I think, is that the decisions belong to the leaders of the organization. And I think the CEO should be entirely on board. The board, the supervisory board, the chairman, should also be entirely on board. They should really understand this. I think that's very important. It's not that they should be implementing, but they should be fully in agreement that this should be implemented. Then specific implementations depend on the organization. Very often, the most optimal way to do it, especially if the innovation is happening outside your core organization, the disruptive innovation, is to organize a separate unit. And it could be a unit that invests in outside projects and outside companies. So, for example, corporate venture unit, CVC. Okay. Sometimes it's a unit that is inside. It's a separate business unit that works on a lot of new projects. So Amazon would be an example of both.
Okay.
So Amazon has corporate venture units, in fact, more than one. And of course, as Alex already mentioned, with Amazon Web Services and many other projects, there are internal experiments going on.
You may think of them as a portfolio of different bets, of different smaller startups or companies. We even used to have a term, 2 pizza teams.
Yes.
So very small startup-ish like teams. And that's common across Silicon Valley companies, whether it's Google or Facebook or Amazon. With these kind of a smaller environment, it's easier to innovate and to bring it to the market. So it's kind of creating the startup-ish environment, but for an internal team or for a CVC unit if it's an investment.
I've heard these terms and read about it. So my question is, do you really execute it? Is Amazon strict on keeping these governance and the structure?
Totally. Living through that gave me the whole idea that it works. So the key advantage of this method, that it works, but only if you implement the rules. And the rules sound simple, but it's really hard to be in line with those rules every single time. It's easy to say agree to disagree. Yeah. But imagine the 4 of us will have to actually live through that principle. It means that we will let Ilya make an investment, even though Franz and myself would be against that. Yeah. How would you be fine with that or not? But if you're in the business of outliers, if you truly want to find the next unicorn, the next Amazon, Google, Apple, then you have to let one person, sometimes a single person in the room, to make a bet. Because an outlier, by definition, could not be understood and approved by everyone. Otherwise, it will not be an outlier.
Super interesting.
Again, it's not only counterintuitive, but sometimes it's difficult to implement from the cultural point of view.
Yes.
And again, therefore, processes are very important. So Alex mentioned, and Franz mentioned, agree to disagree. Do you know that in most venture capital firms, they work as partnerships? So there are a number of partners, maybe 4, 5, 6, 7 partners. And what's really interesting is that the most successful investments are also the most controversial at the time they're made. Okay? In fact, I looked at the history of one very prominent venture capital firm, and I looked at hundreds of investments they made. Okay? And every single investment that turned out to be very successful, most of the partners at the time were against.
Mind-blowing.
But in every single investment that at the time of making the decision, everybody thought, that's obvious, like we should proceed. It never ended up a great deal. Conviction beats consensus. And not only the venture capital, conviction beats consensus whenever you come up with a new innovation, new disruption, new industry, etc.
Franz, in our business environment, in our cultural environment, we're used to looking for the consensus. We're looking to involve everybody and to find the common decisions. How do you implement this principle in our environment?
Just tried to implement it. A couple of months ago, we had not within Verbund Ventures, but within the Verbund Innovation Board. That's our committee to decide on internal innovation. So really a quite hard discussion, a strong discussion with opinions against and for. And then we had voted against some projects and majority voting for some projects. And at the end, the conclusion of all board members was, that was one of the best meetings ever. Yeah, because we really discussed. Yeah, we not worked out until we had a consensus that we gave green light for every project, but really had a hard discussion.
Fantastic.
And I think it's really it should also be the safety environment that it's allowed to disagree. Yeah, I think that's important. And most of the cases are experiencing we just only look on the business outcome, but not on how we make decisions and how we improve our decision making. And I think that's really a large field of improvement we can take in large corporate. Yeah,
I think you should also really allow people to make mistakes.
Yeah.
and allow people, if you trust them, allow them to make decisions on their own, even if everybody else disagrees. And if you and if you don't trust them, you know what? You should fire these people anyway, right? So then it's the wrong people. So just to give you an example from the book, is that, which is typical, but just a well-known example, is that the venture capitalists from Qualcomm Ventures, which was a corporate venture fund, still exists, of a company called Qualcomm in California, met a very small company about 12, 13 years ago, and 3 executives from that corporate venture thought it was a great company. Okay, the name of the company at the time was SaaS-B, Software as a Service B. Okay, that's the idea was. It was in the video production, in the video communications business. They went back to Qualcomm Ventures. There was an investment committee. I'm sure you have an investment committee, okay? So, and everybody voted against. Everybody else. So the overwhelming majority voted against. That would have been the end of the road, because the consensus, okay, was against. However, and that's critically important, Qualcomm Ventures was organized according to the venture mindset principles, and one principle was that the head of Qualcomm Ventures, Nagraj Kashyap, introduced, we should allow the minority make small investment decisions, even if everybody disagrees. And so they ended up making a relatively small investment in a company, and they became the first institutional investor in a company called SaaS-B, and SaaS-B was renamed and became Zoom.
What role does the healthy failure culture play for the venture mindset? Because if I'm a manager in a company and I make a decision, I'm allowed to make a decision on my own. I still have to not be afraid of getting fired if the decision is not going to lead to success. So how do you perceive failure in the venture mindset?
It's a great question. First is that we need to realize is that in the world of uncertainty, as opposed to the world of certainty, failure should be inevitable quite often. Unless you fail, you likely do not invest in enough innovative projects. So therefore, you should be able to fail constructively. Okay? When I go to corporate accelerators, and I'm proudly told, you know, we have a lot of great startups, and what is the failure rate? Oh, we never fail our companies. That also means that none of these companies is likely to become a unicorn, move the needle for the company, okay? So therefore, you need to have a safe failure environment. It doesn't mean that you should like failure. Nobody likes failure, okay? But it means that you have a venture mindset attitude towards failure. We, in fact, give a very good example about Amazon in the book you might want to share.
Sure. So I think you should be proud to some extent of your failures in front of your team. Jeff Bezos once made a big investment in Fire Phone. And is anyone aware of Fire Phone today? No, because it failed. I kept the same kind of culture with my team. I kept on my office successes and failures on the wall so that the team would be able to see that to fail is fine. And there is a reason, there is a math behind that. If you think about a portfolio of a venture capital firm, out of, say, 20 bets, 15 to 16 would simply fail. They will be written off, down to 0, because there is nothing to sell besides just laptops and a chair. That's it. So therefore, for the rest, say, for 2-3 investments, they may generate 2 to 4x return. But you may see the math that it will not compensate for all of the losses. So the idea is for that one single, hopefully not just single, bet which will generate 10x or 100x return. So if and when we asked venture capitalists, what is their main fear? Their main fear is actually not to lose money on these failed startups. Their main fear is to miss Google or Amazon.
Culture of failure. When we lead strategic sessions to global executives, very often I give this example of Fire Phone, which was a big project for Amazon, and Amazon lost hundreds of millions of dollars, okay, on this project. And I typically ask the executives. I'm just asking. So what would happen in your organization
Yes.
to a person, let's say executive vice president in charge, who would have lost $100 million, okay? And kind of everybody giggles.
Yeah.
So fired, punished, whatever, okay?
Would go against it.
Right. So what happened? What happened to that person in Amazon?
So he received immediately. He received a call that don't think too much about that. Just go ahead, build more. And Alexa and Echo was built under the leadership of the same VP.
Wow.
So I think that's a great example of
the venture mindset.
The venture
that's
mindset.
So the way I would say, in fact, that's stealing from the chairman of IBM, apparently from 70 years ago. The same happened there. And I think the chairman or the CEO of IBM back at the time also had the venture mindset. He told the executive who lost money on a project. The executive was called into his office, and the executive was certain that he would be fired, okay? And instead, the CEO of IBM said, I've just spent $20 million on your education. So you'd better try again.
Are we that far in our economic environment, or how do you talk about failure culture in Verbund, for example?
I think we're not there at the moment where we should be, but I think it's improving, and it's all about this safety net, that you are able to have some failures, but you need to learn from. As Ilya mentioned, nobody likes failures. I'm asking my people in the ventures team always, if we are in front of an investment decision, do they invest also their own money in this investment? Really, they would like to add some small amounts of their own money, and then you see is the commitment or not. I think in Austria, it's also the issue that we need a broader ecosystem. Because if the ecosystem is too small, then it's really so you don't have so many new contacts, and I think you need more contacts, more new inspirations, more options to cooperate, and that would evolve and evolve. We see also if we have successful exits, then the former entrepreneurs will then build up new VC funds, understanding how a startup is doing, a CEO founder of a startup is doing, and then that really will help them to get to the next level of venture ecosystem in Austria.
Ilya, one of your research fields, as you mentioned, was about ecosystems. What makes an innovation hub successful? I mean, you're coming from the innovation hub of this planet, Silicon Valley. What's the secret sauce? What's the success factor of it, and can we learn from it? Can we implement the same principles in Vienna?
First, there is no one secret sauce. There are many sources, okay? However, there are factors. When I look at many successful innovation hubs, not just Silicon Valley, I see the following. First, every single innovation hub has a university behind it. And when I say university, it's a university that is embedded into the ecosystem, which is really important. So if we think about Stanford, a great number of Stanford faculty, while full-time faculty, at the same time are behind many startups in Silicon Valley. Okay, which I think is really different from many professors at European universities, where kind of, I think, also culturally, they are professors, ivory towers, as we say in America, professors, and they, business is beneath them.
Yes.
So at Stanford, it's really encouraged. You can be a full-time professor, and at the same time, you can be a founder of many startups. Okay. So I think this is not just university, but a university that is doing great research, but also is able to commercialize its success. That's one. The second factor is the entire supply chain of venture capital. Financing. From the very, very early, which is sometimes even pre-venture, angels, seed, as we say, through venture to late stage. Late stage is important because at the end of the day, for the system to be successful, this companies that created need to find an exit opportunity. Some of them go public, some of them get acquired. Okay. The third factor is the critical mass of human capital. And it's revolving doors. Because, for example, in Silicon Valley, startup founders or startup employees, they then go and work for large companies. Then they leave large companies and start another company. Okay. The fourth factor is the critical mass of large companies that are able to work with startups as investors, so through corporate venture initiatives, for example, as suppliers, as customers, okay, as acquirers, and so on. So those are, I think, the four. There are other factors, but of course, including legal factors, including the regulation factors. But I thought that those four are the most important ones. And again, if you implement only one but not the others, I'm not really sure that the innovation ecosystem will be that successful. But if you implement all four, then the probability that it will be a truly successful innovation hub, I think, goes dramatically up.
The number one that you mentioned was the university. Is that the reason for that, or how was it in Silicon Valley? Which role did Stanford University play in creating the ecosystem that we know today as a Silicon Valley?
Stanford played a very important role, and to some extent it was serendipitous because of the leaders that Stanford had between the 1940s and the 1990s, 2000s, when there were a lot of changes. But the first big change, I think in the late 1940s and 1950s, was that Stanford became Stanford leadership made it possible for Stanford professors, Stanford labs, to form partnerships with large companies, so to commercialize ideas, inventions that happened at Stanford, to convert them into innovations, and then to scale them up. I think another critical element that, for which really I think Stanford is now known as the hub of innovation, is Stanford's interdisciplinary nature, which I think is really, really important. So that we have a lot of things that's happening at Stanford, from the engineering school to medical school to the business school, and all the schools are fantastic, but there's a lot of stuff that's happening in between. Let me just give you an example. So I mentioned my former students, okay? Many of my students who take my venture capital class, they would like to become founders, but they're business school students. So how they find these ideas? Well, many of them go to computer science department, to the School of Engineering,
which is just there,
to the medical school that is just there on campus, okay, and talk to students, talk to postdocs, talk to faculty. And many of my students, for example, one guy, a business school student, okay, found a professor at the engineering school whose lab was developing a new types of battery. But there was no business people in that lab, okay? And so that was, I think, a match made in heaven. In fact, it was match made at Stanford.
Yes.
Okay, so the fact that student became the CEO of a company, that IP was taken outside Stanford, so Stanford licensed it, and now the company raised tens of millions of dollars.
Would that be replicable in Vienna? Could we create something like that? I think in Munich we have Unternehmertum, who I think probably you're their role model, but they're doing something very impactful and similar. But could that be a Viennese model to go as well?
Absolutely.
Okay.
Absolutely. So I think the whole point about Stanford is that, yes, of course, Silicon Valley is unique. Don't try to replicate Silicon Valley.
It's not copy-paste.
Try to understand factors behind. Okay, but absolutely, I actually think that in today's world, I think European society may benefit from rethinking what in fact universities mean, how they are structured, and again, going back to the venture mindset, how they should be organized.
The venture mindset in this case also applies to universities.
Absolutely.
Yeah.
Absolutely.
I mean, what we often hear from universities in Austria, in Vienna, they say, well, we're here to research. It's not our main kind of thing to monetize on our research. But then I'm thinking, well, the public can benefit from the research when it becomes product on the market. Is that the way you see it as well?
Yes, of course public will benefit, but even more importantly, who else, at the end of the day, can be better positioned to commercialize ideas than people who invented those ideas? So very often, they're not the business. They should not be the business people. So I think it's not just telling the professors, well, you invented an idea, now go and commercialize it. Absolutely not.
Create an ecosystem.
That is creating an ecosystem where there will be people who will come to the labs, okay, from inside, from outside, and say, this sounds like a great idea. Let me help you. But also, I think really going back to what Franz said at the beginning, it is really about changing the mindset. And I think they are at Verbund working on changing their mindset, and I think it's the same applies to universities.
Fantastic. Maybe to wrap up the discussion without time pressure, one question that might help us sort of to put it to sum it up again. I wrote it down before. You are also researching on the factors of success of unicorns. Probably some of things will repeat now, but maybe to sum up, what are the real factors of success of unicorns? How do we create next Amazon? Maybe also from Europe.
Absolutely. Well, first of all, the macroeconomic view, I'm going to repeat, you absolutely must have the venture capital ecosystem. Mm-hmm. That is the reason Amazon is in America and not in Europe. This is why, have you heard of French Google? Have you heard of Austrian Amazon? Have you heard of German Netflix? And I can continue the list, okay? The reason is that all these companies were venture-backed. All. That single exception, really, were venture-backed when they were young startups. Mm. Just because there is really no other type of funding available for these companies, okay? Of course, there are a lot of other factors of success of unicorns. We've talked about universities, and when you look at the founders of unicorns, then yes, many of them got educated at top schools, not just Stanford, in the United States, mm-hmm. okay? And many investors also came from the schools.
Educated in their skill set, or do you think educated more in their mindset?
Both.
Both.
Absolutely both.
Okay.
Right. I would add the third factor. So it's skill set, it's mindset, and also it's networking.
Yeah.
Okay. I think that's really important. Another important factor is immigration. You know that my research shows that if you look at all the founders of American unicorns, 44% of all the founders were not born in the United States. 44% of these unicorn founders. So I think that to be able to create more unicorns, the society needs to become more mm-hmm. open.
Do you see any just a sidestep, any relevance of the general capital market when it comes to implementing a good venture capital ecosystem, and does it correlate to each other, or is it completely independent from each other?
Of course, capital markets is very important. Okay. As I mentioned, for example, it's important for these companies at some point to exit. In the US, it's historically been very robust public market, which makes it easier for the most successful companies to become public. So I think that is one example. Another example, which is related to the capital markets, is the legal system. Why it's important is because startups are very unusual creatures. in terms of, for example, incentives. And therefore the contracts, the financial contracts that venture capitalists sign with startup founders are not your traditional contracts. And the Anglo-Saxon legal system allows for the contracting parties to negotiate very specific contracts, and I think that's really very helpful, especially for early stage startups.
Also the possibility of stock option programs for employees and so on and so forth.
Absolutely. That we also talk about in the venture mindset.
Also inside.
Absolutely. There's one of our 9 principles.
Does it apply for corporates for you as well?
Absolutely. We give a lot of examples. Absolutely.
If you think about the stock option program, or RSUs to be precise, at Amazon, it's structured the way to stimulate your long-term thinking.
Okay.
So that you will not just gain, you're not focused on the next quarter results. You are focused by definition as a publicly traded company. But if you make a bet on innovation, you have to be patient. If you think about how many years does it take for a unicorn to become a unicorn, it takes 7, 8 years just to become a unicorn, not even to IPO or to get acquired. So you have to be patient enough. Jeff Bezos said famously that they're patient enough to wait for 7 years for a new business to truly emerge and become a powerhouse of a company. It doesn't mean that they will not track your results next quarter. It's just being patient enough to invest long term and make the team think the same way through incentives.
And there's a guideline in the book of how to implement.
Absolutely. The key thing that I would love to mention is that good intentions never work, but mechanisms do. You have to build the right set of mechanisms in terms of incentives, in terms of the organization, in terms of the processes that we discussed, that will stimulate this long-term thinking. You should not expect that will be automatically emerge within your company.
You know, when we bring up this topic in our ecosystem, obviously there are legal departments that react, but also HR departments say, oh, well, that doesn't really, how do we explain it to the other ones who don't have it, and so on and so forth. But as far as I understand you, there are,
of course,
recipes for it.
Franz just mentioned one, skin in the game. Unless you are a co-owner to some extent, you really cannot make the same way the decisions are made by VCs, because VCs are making decisions in order to make some profit. They are focused on that profit. They're focused on the exit. The same with employees. Their decisions will be smarter just if you implement the right set of principles, like the skin in the game.
Is it possible in our ecosystem? Can you do it, for example, in your organization?
We tested it in one of our first ventures. It's hard to implement, but there's the willingness to open because there's the conclusion, if we don't set the incentives right, we don't get the right outcomes, the right results. So it's really about incentivizing some people. And for Verbund Ventures, we have now this 3 years time period from 24 to 26 with our first portfolio building. And then we also have to decide if we go longer term, getting also the incentives right, and then longer term.
I could talk to you till, I think, next month, but I know you have obligations in Vienna, another interview waiting, and I think you have keynote at the Venture Mindset event very soon. Thank you so much for taking time for us, for our audience, for sharing all the knowledge with us. Maybe to sum up, the key takeaway, key takeaways from this wonderful book that I will definitely read after so much input.
You haven't read it yet?
Not yet. Unfortunately, no, shame on me,
Well, I'm a professor. I love giving home assignments, so you must read the Venture Mindset.
Good.
Shall I start with make many bold bets? Have a portfolio of bets, whether it's a career bet, whether it's a business bet, whether it's any kind of bet, but have a portfolio. It's not a single bet that will make you rich or successful. It's a portfolio. Some of them will fail, so don't be afraid of failures. We just explained to you why. Make sure that within your portfolio of bets, you have something that may result in 10x, 100x return. I think this is the key.
Yeah, we have to lead by example, and it's on us to create an European innovation moment now.
Fantastic. On that note, thank you so much for being here. I hope you were able to get inspired, to learn something. Let's all read this book and really work on it in our Austrian ecosystem to create the venture mindset that we need to be competitive on the global scale, to bring Europe up front where we could be. We have the research power, we have a lot of scientists and experts, and let's work on the transfer and monetization of these resources that we have, and that's basically the recipe for it. And thank you for sharing this with us, thank you for being with us, and goodbye.